Good afternoon, traders, and welcome to another episode of Market Snapshot. Today is the 3rd of June 2024, and let's dive into what's happening in the financial markets. Let's quickly highlight last week's news. Fed's preferred inflation measure, the PCE index, met expectations at 2.8%. However, it rose up by 2.7% in April compared to the previous year. The Euro-USD exchange rate increased by 40 pips, while the USD yen saw a slight decline. Major stock futures also dipped slightly before Friday's market opening. With inflation appearing controlled, investors are more optimistic about potential rate cut, which may lead the Fed to reconsider and adjust its rate cut outlook. Out of the Eurozone, we had the flash CPI, which was at 2.6%, slightly above the expectation at 2.5%. Especially core CPI, which filters food and energy, came at 2.9% versus the forecast at 2.7%. More about that, we will discover that on the economic calendar. I've highlighted this week, so from the 3rd to the 7th of June, the highest importance. So out of the Eurozone, we've got the retail sales. The forecast is at 0.9%. We've got the ECB interest rate decision. The forecast is at 4.25%. So there is an expectation of interest rate cuts. Usually a cut in interest rate means a weaker euro currency, then followed by a ECB press conference. So moving on the 7th of June, we've got non-farm payroll and unemployment rate. So the non-farm payroll just looks at the number of employed people during the previous month, excluding the farming industry, and the forecast is at 151. Unemployment rate is sitting at 3.9. Previously, it was also 3.9, but the expectation was a little bit lower. Let's quickly dive into the most popular pair, Euro-USD. We've got the daily chart. We saw quite a bit of a move last week with the euro dropping about just 0.5% all the way to 107. And this was the 2-week low, actually, and this was highly influenced by the rising bond yields. The treasury yields tend to make the US dollar a lot more attractive. Looking ahead, we've got a massive shooting star there at 108. It found support at a 50 moving average, and it looks like it's bouncing back up. And my point of view is that the range is actually tightening, and we should see a breakout. Depending on which direction, we should see about a 200 pip move. So if there is a bullish move, a breakout should be around that 108. If it breaks through that level, then we should see that 200 pip movement. But then if it does go the other direction, support at 107, my outlook is that it's going to go all the way down. We're expecting a lot of volatility this week. So for a lot of those traders, and most importantly, I think the ECB interest rate will have a massive impact as well. Thank you for watching our content. If you would like to see more videos like this and help us with the algorithm, please like and subscribe to our channel. We plan to bring a lot more content and help you with your trading. So until next week, happy trading.